So a butterfly session, right? We play when we see a range, right? And those listening now, I end up hitting a record button a little late, but it will still make sense. So I bought one call, 3,500, right? For date is September 17, 2021. Okay. So I bought $3,500 call, one contract. Option price is 9. The option prices were somewhere near here. I forgot the numbers. And I bought this, and then I also sold the mid strike 35.50, and I sold 2 contracts here. And these I probably sold. So the option price for this contract was probably $5 per contract or something. Okay. So $5 per contract maybe, or I'll do 5.15 or 5.10 actually, so that this times 2, since we have 2 contracts. Okay. So now I bought this butterfly for $1.75, but I think this is close enough, $1.80. Okay. So number of contracts 2, option price total was $10.20. Okay. $10.20. And this I'll just do quickly. Let's see. There we go. $1.80. Now, instead of paying $9 for this $3,500 call alone, I decided to do a butterfly with a 100-point spread, which ended up costing me $1.80. So I sold the $3,500 call for $9, $35.50, 2 contracts, right? Option price per contract, just so these guys can people watching after is more clear to them. Okay. So a 9, I give out of my pocket. $10.20 I received for selling the 35.50 call, and then $3,600, $3 I have to pay. So the total cost is $1.80. Make sense? Now, number one thing that we want to know here is what are the max profits? How do you know what the max profits here are? Max profits, we want to know. You always take this mid price, so 35.50. So 35.50 minus either one. So you can just do the last one, okay, which is 50. So our max profit is $50. So $1.80 to 50, which is over, I think this is over just close to more than 2,400%. Okay, to, roughly there. Okay, to be exact, 180 to 25,000 is 2,677%, which is a lot. Okay, now to gain this on this $3,500 call alone, Amazon has to close over like $3,700 bucks. Okay, over $3,700 by September 15th. But here our max profits are up to 2,677. Now, how does this exactly work? Now, let's say, for example, Amazon it hits our range, for example, on September 17th. Now, you do not have to hold this until September 17th. Know this. You can scalp butterflies as well. Okay. Today, these butterflies were trading at, I think, almost $5.30. Okay. If I wanted, I could have sold these butterflies at 5.30 to lock in more than 200%. Okay. While this call was only trading at around 18 or 19 bucks, I think they didn't even go up that much, only 100% move. But my butterflies went up by a lot. Okay. Now, today, Amazon, after this move from 30, so my entry was at 33.03, so $3,300 or below, and then it made a 120-point move. Okay, it made a 120-point move. Let's see what the butterflies were priced for today. Okay, so I'm just gonna go over this quickly and how they exactly work. Now, today's option price. So today's option price. Because Amazon moved up a lot, okay, I mean, so all these options went up. So this, I'm just going to make up a number. It went up to, let's say, around 20 bucks. And this from 510, it probably went up to like, I would say 10 bucks. Let's just say, for example, that this also went up by 100%. I'm just going to make it easy for myself. So that these were also trading around, I'll say 18 bucks. Okay, and then this probably went up to 520 maybe, from $3 to 520. Okay, because it's a further out call, so the premium will move slow. And my total cost here, what was it? So we just go here, sum. So 20 minus 18 plus 520, right? 720. So maybe just give me 1 second. I'll just change up the numbers a little bit to bring it down to what they actually were. 20, maybe this can be $4. Okay, for just these numbers, ignore the numbers there. This is just to give an example. Okay, so let's say, for example, the $3,500 calls which I bought today, they were priced at $21. The 3550 calls I bought, they were probably priced at around $10. Okay, $10. Okay, so option per contract $10 times 2, 20, because I sold 2 of these contracts. Okay, I sold 2. So for Butterfly, you always buy 1, you sell 2, and then you buy 1. Okay, so that your max loss is defined. Okay. And then I bought the $3,600 calls, which were priced at 4 maybe. And my Butterfly cost was $5. Let's say, for example, from $1.80 to $5 increase. I'm still holding on mine. The reason being is, so if you go back to the chart, because I still think that Amazon can keep running here into September 17. Maybe it dips a little bit, it keeps going, and then it gets stuck in this range between 35 and 3,600. Okay. Now let's say on the last, so I hope you guys got this part first for the option premium movement. Okay. I don't want to go too much detail into this because this will be like a level 1 teaching. Then all of you guys know options. I hope you guys understand how the premium moves options. This is very basic, right? The call that I bought from 9 is now valued at 21. The 3550 calls are now valued at $10 per contract. So $10 times 2, $20. And then $3,600 calls are now valued at 4. Okay. So now when I execute this, it will be vice versa. So these buy calls, I will sell them. These I will buy them back, and this I will sell. Same units, the same strikes, and same number of contracts. Okay. So right now, let's say they're priced at 5. Now let's say, for example, on September 17th. Okay, on September 17th or September 17 after 3 p.m. is when you hit the max profits. After 3 p.m., just 1 hour before the close, they'll give you somewhere around 2,500%. Now let's say on September 17th, give me a strike price, guys, between 3,500, 3,600. Somebody just type it in, and then I'll show you what the max profits could be. Let's say that it, at 3 p.m. is trading near there. So at 3 p.m., yes, you think Amazon trades around 35.20. Okay. So on 3 p.m. on September 17, my expiry date, he thinks Amazon is trading near 35.20. Okay, so 35.20. Now, right off the bat, what will be so it's trading at 35.20. Okay, so we have a $3,500 call, we have the 3550, and we have a 3,600. The intrinsic value of the $3,500 call, because this is in the money now. Okay, Yash, what will be the minimum price of this contract for 3,500? Was the minimum that it will be priced? Minimum will be 20. Yes. At 3 p.m., 1 hour left to go. This might have some premium included, which could be 21.50, just for example, $1.50 premium. Okay, or maybe just let's just go with 21. Okay, so $21 and 35.50s, $30 out of the money might be going for like, I don't know, 50 cents max. And this will probably be going for $0. Okay. Now my pricing for the Butterfly here, $3,500, 21 bucks, 35.50. I sold 2 of these. Remember, we sold 2 contracts, right? So we had 1 contract of this, 2 of this, and then 1 of this. All right. We sold these, and now we buy them back for $1, right? 50 cents times 2, $1. And these are, let's just say, priced at 0. You don't get nothing for this. And what's our total profits for this? 21 minus the 21 minus, and then plus this 0, 20 bucks. So price of our Butterfly is 20 bucks right now. So from $1.80, we bought at $1.80, and it went all the way to 20 bucks. Okay. And this is exactly, you do it for all of these prices. And let's say if the Amazon was trading at 35.50, 34.40, these would be at $40, right? These would be trading at 40. This might be trading at like $2 with 10 minutes to go, or 1 hour to go, $2, I think. And this might be trading at 50 cents. Okay. What will the profit be then, right? Then it will be 40 minus 2, right? 40 minus 2. And then plus this, right? $38.50. Okay, from $1.80 to $38.50. Imagine taking a $3,500 $9 strike over 2,000%. Amazon has to go to 3,700. Here you took $1.80 to $38.50. What matters is the percentage. Keep that in mind. Okay, 38.50. All right. On September 17th, 3. And let's say you want to play Amazon to the upside. You think Amazon goes higher here. For example, Amazon goes higher from here, but you don't have enough money to play the in the money or premium calls. You could easily just play a butterfly like this at $1.80 and you can sell. Now we had some people in the group like MKO who took their profits, right? They took their profits off for almost I think 70% or 60% was it? From $1.75 to $2.70, I think he sold at, right? Mine are going for 5. I'm still holding mine because for butterfly, I usually like hitting 1,000% at least, and they happen, right? I will start scaling out maybe tomorrow if Amazon gives me another 50 to 100% run. I'll take some off for 300-400%, and the rest I will hold. Okay. Is this making sense, Yash? And all you guys watching, is this making sense? If you don't understand, don't worry about it. Just learn what options trading are. There's a lot of ways to make money in options trading. Yeah, awesome. Now let's say Amazon on September 17 is not trading at a lot, it's trading outside of this range. Let's say it's so this is we're speaking of Amazon closing within the range. Okay, on September 17, 3 p.m. Let's say you end up holding on Thursday. Your butterflies were going for like $15, let's say for example, but you think no, 35.50 is going to be pinned because time decay will kick in and you'll make more money. But what happens if Amazon goes out of the money, out of this range? Okay, now let's look at the negatives. So if Amazon goes out of the range, okay. So let's say if Amazon, give me a number outside of the range, any number. Anyone? 34.50 or 36.30, doesn't matter. So 34, so let's do 34.50 first outside of the range, right? Outside of the range on September 17 at 3 p.m. Let's say you end up holding to the expiry, you don't sell it in between, you don't take your profits. But on the last week of Friday, on Friday, the Amazon goes out of the range. Okay, so let's look at the scenarios right there. Now these $3,500 strikes might be going for like it's 20 points out, it's 50 points out of the money. At 3 p.m. they're going to be useless. I mean, maybe 30 cents maximum. These will be 0. These will also be 0. Okay. Now your total cost of butterfly at that time will be 30 cents, right? So 30. This will be 0. 0 times 2 0. This will also be 0. So your total butterflies will be worth this minus and then plus this at 30 cents. So now you're in a loss from $1.80 to 30. Let's say by 3:30, 4 p.m. Amazon is not even going for 30 cents. I mean, these and this is 50 points out of the money. These will be worth like 5 cents, not even 30 cents. Okay, so there I think they will be worth 5 cents as you worthless, and the broker probably won't even fill you here, so they're likely to go on out of 0. So your butterflies expire worthless, right? Because of your 3,500s at 0. These are obviously the higher strike at 0. Okay. If the strike is lower. Okay. Now let's say if Amazon is trading like at 34.90, for example, 1 hour to go. These butterflies might the $3,500 strike might be still be going for $2. Right? If this is going for $2, you can still break even. Right? Make sense? So you guys understand the intrinsic value on options? Am I right? At 3,600, let's say what about at 3,600? So let's say Amazon closes at 3,600 as sharp. Okay. If it closes at 3,600, $3,500 call intrinsic value will be 100. Okay. 3,550 intrinsic value will be minimum 50, right? $3,600 in the money with 1 hour to go might be around, I'll say $3. Okay, just an example, like 1 hour to go, 3,600, $3. Let's see, let's look at total cost here. So the total cost is $100 here. This is also worth 100 and this 3. Why is this worth 100? Remember, because we have 2 contracts here. We sold 250, so we're going to buy back 250. 2 contracts of 3,550. Okay. This we have 1 contract, and this we have 1 contract. All right. So 100 times 1, 150 times 2, 100, 3, and this we bought. Remember, we bought this. This we sold, and this we bought. Okay. This we bought. And now, if you were to execute this, what's the total cost here? 100 minus 100 because we got to buy it back, right? And plus 3. Your butterfly cost is $3. And let's say by the end of you keep holding it, Amazon closes at 36. This will be 100. This will be 100. This will be 0, and which makes your butterfly worthless. Okay. Make sense? Okay. Now, let's say if Amazon, somebody said 36.30, like it's way out of the money, 30 points out of the money. Okay. So 36.30 out of the money. What will the butterfly be worth? Because it's outside of the range again to the top side. So let's look at this. Now, $3,500 calls intrinsic value will be 130 minimum. 35. So I'm just gonna do the intrinsic values here, right? Just to make it easier so you guys understand. 3,550 intrinsic value will be 80. $3,600 intrinsic value will be 30 towards expiry. We bought one of this. So how much will this be? 130 bucks. 80 times 2, 160. 30 times 1, 30. And the total cost here for our butterflies is 130 minus 160 plus 30. Our butterfly is worth 0. So one, if it's outside the range, is worth 0. Make sense, guys? So if Amazon's trading near 35.50-ish towards expiry, towards a date, these butterflies will be worth 50 bucks. But if you think Amazon just moves up from here, you don't have the money to play, you can just buy butterflies. Like you don't have to choose a range. You buy this butterfly, right? And as long as it keeps going up in the next coming days, your butterfly will keep going up. Our butterfly right now, they're 200%, right? Those who are not in premium, right? I sold my spreads alone. So I have my butterfly, I'm still holding. Why? Because they were cheap. And I bought whatever, how many contracts I did. And I didn't even scale out yet. I should have scaled some out at 200%, but I just chose not to because I have, I sold the spreads at a very high cost. Okay. Any questions regarding these butterflies? I mean, is it making sense? Those that are confused, don't worry about it. There's so many more ways to make money in the stock market. You guys have no idea. Stock market is, there's so many strategies you guys can use to make money in the market. So many. Yes, yeah. So you choose the, see, in butterflies, the only skill that the skill in butterflies is choosing the mid strike and the range. How do you get to that range? Now here I gave you guys an example. So if I remove my drawings just very fast, right? I chose the monthly month and action for September. That the third week is, we call them monthly options, right? So from here I said to myself, you know what? If this is the bottom, if this marks a support, and we run towards this gap, which is $3,600 right here, by September 17, you know, from here we can run straight up like this week, right? We might even stall on the way for a few days, and then we maybe rip next week towards 3,600, and then we might stall here for some time, right? This range. And in that week, if Amazon's trading between my range of 3,500 and 3,600, my butterflies will be up about 600, 700%. Okay, just for Amazon holding this level. And if Amazon rips towards 3,700, there's good chances that it dips towards 3,600 again, right? With few days remaining, my butterflies will still be up like 10 bucks. Okay, even though it's outside of the range, with time remaining, my butterflies will still be up a lot. So let's say, for example, if on September, let's say with the 3 days to go, right? So just an example quickly. Let's say we have so September 17 is the expiry. Let's say September 15, my Amazon's at 3,630. How much will my butterflies be priced? It's outside of the range. Now, 3,500 intrinsic value is 130 with some premium. Let's say it's 145. Just an example. 3,550 intrinsic value is $80 here, but let's say with premium it's around 85-ish. Just an example. $3,600 calls at 3,630 with premium is at 40. But just a rough example. I have one contract of this, two of these, right? The currency. One of this, two of this, one of this. The value of this is 145. Yeah. The value of this is 85 times 2, 170, and then the value of this is 40, right? And the total cost here for our butterflies is, let's see, so 145 minus 170 plus 40. My butterfly is still worth 15 bucks, even though Amazon's outside of the range. Why? Because my $3,600 call has more premium than the 3,550 and 3,500. The deeper in the money you go, deeper in the money call has less premium. Know this, guys. If you did not know this, if you go deeper in the money call, they always have less premium. So $3,600 here has the most premium. It has more premium than 3,550 and 3,500. Okay. Make sense? Yes. Awesome. Are you guys finding this useful, helpful? $3,600 has more because it's now it's also in the money towards 3,630 because Amazon. I mean, there's still 3 days left, right? There's something called IV and premium and options, guys. because this is already in the money, 3550, 3500. So these are going to be trading close to intrinsic value. Okay, this $3,600, Amazon is more likely, maybe it's only 30 points away, so they add some premium out of it because Amazon can easily hit 3650. Okay, so because if Amazon's trading at 3630, the 3650 calls are probably going to be priced at like $10 with 2 days to go. They're not going to give these to free, right? For you to free. That's $10 just in premium. Okay, under if the call is not in the money. Okay, any call outside of the money is nothing but all premium that you're paying. Okay, any call at the money or out of the money is always premium that you're paying. There is no intrinsic value whatsoever. Know this. Options only have intrinsic value when the call is in the money. Okay, so these two have a lot of intrinsic value than $3,600. Okay, 36 at $30 intrinsic value, 3,500 has 130, but the premium is only 15. Percentage wise, 3,600 has a lot of premium. Okay, so to understand this now, you will have to go into Greeks, right? You will have to learn. So someone who the person that has the Joseph, so you'll have to learn what delta is. You'll have to learn what delta, gamma, theta, vega, and then rho. Okay. All right. So you can learn these four. These are the most important. And then this if you want. Okay. This is up to you if you want to go a little advanced. Okay. So you'll have to learn the Greeks in order to understand the premium in options. Okay. And so guys, that was a 30-minute session on butterflies. Is this good enough for you guys? Now I want to move on to some chart requests for 15 minutes, which I want to take from all of you guys. Perfecto, move on. That 30 minutes went by fast. See, when you guys learn something valuable, time goes really fast. I didn't even know it was 30 minutes. I've been doing the lesson on this. So guys, that was a butterfly session. I hope you guys enjoyed, right? And now let's go over to charts. All right, guys, throw in some tickers. And let's go over some charts. Yes, Yash. So to use butterfly, just when you don't want to pay a lot of money for strikes and you think the stocks will continue up, right? And you want to gain in some high percentage, you want to scale in. Let's say, for example, you're looking at a $10 call. You can only buy so many contracts. Maybe you'll buy 2 contracts at $2,000, right? But then you want to scale out. Let's say that it doesn't do much, it goes down or it goes up, and you want to scale out slowly. But from 2 contracts, you can only scale out 1. Butterflies, you can buy 10 contracts at $2. Okay, then you can scale out slowly if you think Amazon keeps running. You can sell 2 for 100%. You can sell the other 2 for 200%. You can maybe sell the others for whatever percentage, right? And then the percentage growth is more potential. Okay. And Andrew, we do all kind of plays. We do plays for beginners. We do them for complete advanced. We do everything in our Discord, right? For beginners, I mean, it's just calls and puts that we buy, right? I mean, executing calls and puts is very easy. If you've never done it, if you're not comfortable, I highly suggest that you're on your broker, you watch the lessons, you understand what options are. And we do have some in sessions where I have gone over the Greeks in the past. So if you're in premium, just go into sessions, understand what options Greeks are, and it'll make all sense to you, right? And if you want, then maybe I can go with Greeks again in a week or 2 for beginners, right? No, I mean, should a rookie jump into your first butterfly? See, you can play a butterfly on any ticker you want. I play on bigger names because of bigger moves, and they give a high percentage return. It's easier to figure out a range for me, right? Now, if you have never done a butterfly before, then obviously I hope you must know what options are before doing butterflies. And for butterflies, your account also has to be approved from your broker, right? That you're executing it right. Execution matters a lot in butterflies when you do option strategies. They have to be right. Sometimes people mess up. In the past, they'll choose different expiry dates for different strikes, right? When they all have to be the same. Like it's just some mistakes that people make sometimes, right? As long as you know your execution. Here we buy, sell, buy, and then when you're selling it, then you gotta sell, buy, sell, right? Vice versa. No problem, Andrew. So the first chart that we have right here is by Joseph Tesla. Tesla, guys, Albie bought the calls today, right? He bought the 750 lotto calls, right? And a very smart play by him because right out the back, I think he chose 750 because as we can see, 750 above is the resistance, right? Right here in this range, right? So there's a good chance that from here it goes above 740. and then his calls will probably go near double if Tesla goes up another 10 points, right? And I'm pretty sure he's going to scale out. He's very good with that. Tesla right now looks great. I love this chart. It's bumped a lot of heads here by resistance, as you guys can see, and it kept getting rejected. For many days, it kept getting rejected. The good point here was that it held. It held. And then finally, you know, it didn't break out. So what happened 2 weeks ago, they dumped Tesla to the 200 moving day average, and then they brought it right back up. They made this small little bull flag here, and today it broke out and it held above all these prices right here. It held above everything and closed right at the top. Buyers showed us control, right? And tomorrow is likely to continue. RSI is at highs, and then we zoom into the weekly chart. Let's go out to the weekly chart, right? So remove drawing. So what does the weekly chart say? A nice little trend line here. If we draw it on the weekly, a nice little trend line that is holding, right? For a few weeks, it consolidated here. So the premium that LB got today was priced very well because Tesla was going sideways for some time. It was not able to cross 720 or full 720. So the calls, out of the money calls, premium dropped by a lot. Okay. And Tesla can easily test 748 this week, and I think it will. So the weekly looks great. It's right at resistance, and tomorrow if it goes through, 748 is the next resistance on the weekly. 748, then we have 753-ish, and then we have all the way 780, right? And then let's look at the monthly chart. What does the monthly say? Monthly, again, a beautiful bull flag right here. A beautiful bull flag on the monthly. A chart does not get any prettier than this. These technicals are amazing, right? And to bet money on technicals like this, I think one cannot go wrong. Yes, these technicals can fail. Tesla can have some negative news tomorrow. Elon Musk might tweet something stupid. We don't know. Anything can happen. In China, their plants can get shut down, or their plants can get shut down in the States. Anything can happen. That's news we don't control. But technicals, right? A nice bull flag that it broke out of last month held, and this month looks like it wants higher, right? It's already higher than the last 3 months, right? Let's see if it can maybe take out the April bull flag. And this chart suggests that Tesla goes a lot higher in the coming month, as long as this month also closes green. Okay, and then we can have a nice little run. And tomorrow is a month-end action. I think it has some steam left. It'll probably go higher, or maybe a little bit dip. Okay, so on all chart time frames, Tesla looks beautiful right now. It cannot get any more beautiful than this. Okay, so that's Tesla. QCOM. I love QCOM long, right? I love it. One of our members, he works in QCOM also, and great comments by him. He's been holding equity. It broke out of a multi-month. So in 2000, as you guys can see, we're in the monthly chart. QCOM was trading at 99 bucks, and it took 20 years for it to break out. 20 years it took for QCOM to break out. And guys, this happens sometimes. I'm now, many charts in the market which you're trading today, on which you're looking at some setups like this, right? You might be looking at certain setups which look something like this. I'm just going to show you guys, and some of you guys, it might make you look very bullish. You guys might go in with a heavy size, or you know what, this chart's going to break out. It'll probably test near all-time highs. This can happen. Something like this can happen. Keep that in mind. For many years, it might not even move your account. Those calls will go to zero. That's the reason we always tell you, manage your size, manage your position. Anything can happen in the market. Now on the monthly, QCOM just broke out of a 20-year base just last year, not too long ago, only for 1 year, right? And now on the monthly, it looks great. A nice little curl up, right? From here, I think it goes much higher. The number is 146 that we need to hold. So let's go in the weekly, right? And the chips, we all know, I mean, they're in demand. This demand is crazy. It's never been like this. On the weekly, it's been holding these levels, right? It broke out, held these levels, broke out again, and then gave up some gains. It's trying to hold here now, okay? It's trying to hold here now. And this, if we can get above 146 here, right? What we want to see is buyers back in control. Here, they're fighting with each other, okay? Here, they're fighting with each other, so it's a bad time to get in. I want QCOM above 146, show some strength, and then above 148, right? And then we can see, okay, you know what? Then the fundamentals come together. SAMA is in demand, whatnot, this, that. And we can get above this resistance, and then we can obviously have a nice little spike towards upside and probably all-time highs. And on the monthly chart, the best example I always show is Microsoft, right? When it was stuck for many, many months. The Microsoft is the best monthly chart for me to show what can exactly happen when a chart breaks out of a multi-year base. Right here, broke out after 17 years, and it's never looked back after. Look at this. It's a, I mean, one of the best moves I've seen in a stock ever, a parabolic move in the last years. Forget what happened, small dips along the way. So QCOM, what right now is doing is something like this, like something like this. Not exactly, I'm not saying QCOM is going to do this, don't get me wrong, my worst question, but I'm just showing an example. It's resting. QCOM, if you go long, maybe 1 year, right, just buy some calls and just leave them alone. I think it has a lot of potential. So that's QCOM, right? And if you're playing a daily action short term, then I would not play it because I would be gambling my money away because I don't know what it's going to do. I'm just going into some details here so you guys understand how we admins analyze our charts. It's not just looking at the kind of low by this chart. Nope. They can easily reject this right here and take it down, right? What we want to see is we want QCOM right here. We want buyers in control. We want them to fight. And when we see the breakout right here and we nail it for this $10 move, and there's a gap right to 162. So above 146, 148, you let this trade come to you. Above 150, we have a $10 move on QCOM that we can catch because we're trading, not investing in it. Okay, we're trading it. Investment is different. You scale it into equity on a monthly basis. Facebook, absolute ripper, all-time highs today, right? Beautiful action, right? We had a lot of fear last 1-2 months, all these comms on tech, nothing, but the market's doing what it's going to do. Levels are real. This is what's real. Facebook's at all-time highs. Forget all these taper news, Fed news, whatever it came, Delta variant, whatever it may be. This is truth. Facebook's is at all-time highs, and you just play technicals along the way. You'll make money on it. A little extended from 351 to 380, but at the same time, it just broke out. Buyers are in control, no sellers here. As long as we hold above 380 tomorrow, we can definitely see a run, a psychological level 390 and 400, right? On a stock like this, I would just play in small. I would buy 2-3 weeks out, 3 weeks out, play small, 390 calls. If they work out, they'll give you more than 100%, and then have the courage to actually hold them if your position size is right, because you want to bank big on it, right? Your 390 calls can easily go up by 300-400% if Facebook continues to run. Okay. And if it fails, because you manage your account, you can either stop out or average down depending on how much cash balance you have. But here, I love Facebook 380. Let's see where it goes. On the weekly time frame, it closes anywhere below 375, then is likely to be bearish. Then we can see 350 again. Okay. So we have 4 more trading days. Let's see how it closes. Okay. And then we have Costco. I love retail. Costco, amazing chart, right? Amazing. So the reason I said Facebook, you buy some time, because usually when a stock breaks out to new to all-time highs like this, sometimes it will back test, right? It will back test. It'll give you a chance to get in. Then you play a little long. You buy 3 to 4 weeks out and then play the momentum to the upside. Okay. Costco looks amazing. I think it just continues slowly going towards $480, $500 in the coming months, right? And always they should not give up 446. So 446 has to be held. And then here, it should break above 460 hold. So above 460 hold, you can play this towards a 480 move, psychological numbers. Learn what these numbers are psychologically, okay? You can easily catch a 20-point move. Forget 20-point move. Even if you catch 460 to 470, you can make a lot of money on this name, okay? So Costco, bullish. Nice little uptrend, or you can draw your triangles if you're a technical guy and just play the upside. TSM. TSM, good looking chart. The only thing I see here is it left a little gap below 200 moving day average. So they might try to fill this gap, right? Now they don't have to fill it, obviously. They might try filling this gap right here. Okay. It's a little extended from 108 to 118. So let's see what they do. They can easily have this in a chop for another month or 2. Okay. But if it gets above 119, then we do have a gap to the upside as well. They can easily fill this gap 124, and then the following month they can bring it back down again, and then maybe then take all-time highs. Anything can happen. But here it needs a 119 hold. Personally, I would not play it because it's a gambler's zone for me. I will either play this above 125. Options, it's okay to buy them at a higher price. I will either play above 126 solid hold towards the upside, right? Then it leaves a gap, or it comes down, and I would probably play the support at 107. Okay. That's my play on TSM. UPST. Okay, so from 130 to 150 plus. Wow, so this was written when we probably went over this in pre-market or something. It gave a $20 point move. In fact, it gave a lot more. And the funny thing is, LB told me to buy right here at 120, 127, 128. He nailed this move. right? I wish I had bought it because I actually wanted to go long on this. I did not buy it, but things happen. It's all good. Here is made a little copy action here, right? Huge move from July 109 to 215, almost 100% move in 1 month. Okay, 100% move in 1 month. Options are probably priced crazy high here. I would not buy to the upside. Here, what I would do, if anything, is bear call spreads. Okay, what I would do is bear call spreads, if anything. Okay, bear call spreads to collect premium. Collect premium. So this is what I would do. Okay, I will sell some calls here, right? With some time, I will sell some calls here with time, and then buy some for protection and just collect the premium on Costco on UPSG staying here somewhere, either sideways or maybe dips, one or the other. Okay, but if it's strong, if it holds, if it gets about 228, then it can run a lot more, obviously. Okay. On this, I would only do bear call spreads at the top, sell this premium, and because the options are priced really high. Okay, likely to work in my favor. But here, I would not pick the upside unless you have some strong numbers regarding something. And then we have GSET. GSET, I saw a lot of flow today. A lot of flow came in. Usually when a stock gaps up like this, a small cap, some people buy in anticipation that it's going to go up, and some people obviously know what's going on in the market. They might buy. GSET right off the back above 3, this can absolutely rocket, right? I think they had news with Apple today, right? They had news with Apple, right? Globalstar. Yeah. Yeah, they had yeah, for their new iPhone 13, I believe, something to do with them. And above 3, this can absolutely fly. A nice volume bar here, right? And as long as it gets above 3, it can go pretty high. Personally, if this stock stays here for 2-3 days, right? If it consolidates here, right? Then I would look to buy long. I would definitely look to buy long here. Or if you know about the company, you looked into the numbers and you think the Apple deal is powerful, is going to continue going up, I would go in 2023 calls. Just put some money in there because it's only trading near under $3. I would probably buy like $5 calls. It's a small cap. If it moves, it can fly. Okay. But above 3, it needs. Okay, above 3. Like for a solid play, above 3 is required. But right now it's trading at 235. Okay. And then we have AMAT. AMAT, nice action on the daily, right? Looks great. Obviously here it's in a supply and demand zone, right? Here you guys can see it's in a supply and demand zone. Playing this here is nothing but a gambler's bet unless you're buying like 6 months or 8 months out. What can happen here? Anything can happen here. There's no way this stock's gonna rip through here just like this. Okay, I mean it can unless there's some crazy news, it may rip through. But here there's a lot of fighting that goes on this stock here. There's a lot of fighting that goes on here at these levels. Okay. Right on the back, this stock above 142, 143, above 1842, I will like this stock. And above all-time highs is when I will play the stock to the upside with time block. I want this above all-time highs, which is I think above 145. So 142, I will keep an eye. I will put my alert on. Above 145, I will play this towards 150 psychological level upside. So a $5 trade move. Okay. Here it can easily go sideways and just kill premium. Unless you think this does Applied Materials is a great stock, I think it goes higher on the longer term time frame. Let's look at the weekly, right? So I would definitely buy some time on this. I would not just buy it in here, but this can easily, for many weeks, can stay in this range. It can stay in this range for many, many weeks. Perfect example is Amazon right here. You guys see this? One of the weekly buyers and suppliers start fighting, it can just chop, 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 chop for many, many weeks. Okay. So AMAT, there's something similar can happen. I'm not saying the same thing's going to happen, right? It needs to break all-time highs and then you can play to the upside. But here is nothing buyers and suppliers just fighting with each other. You will be gambling your money to the upside or downside. And then we have, well, Joseph, with Dassie now, you're bringing in fundamentals, which is great, right? So playing technically is one thing, price levels. And then if you're playing with that, then that's a different analysis altogether, right? But if we're playing levels, $3-4 moves are very easy to predict because remember, we're trading the stock. Now, these comments are based on investments, right? So 2 different things now. So I agree with you. So based on your comments, you might not want to go long. You would want to wait until it breaks out. Okay. Walmart. I love Walmart long. I already told you guys, I think on the weekly is a nice base, right? It's a stock that's been lagging behind, right? I think with all the prices going up, Walmart will benefit, in my opinion. I am long on it. And I think above, I'm just gonna give you guys one number. Above 154 close on daily. This is my gift to you to 160, and can happen, in my opinion. Okay, a $6 move, 154 plus close. You can buy calls 2 months out, 3 months out, maybe 165, 170 strikes, and those will double, triple, quadruple, in my opinion. If you want to play even safer, you can do spreads. But 154 plus close on Walmart, you're welcome. Okay, that's all I'm gonna say. I'm not saying go all in. Manage your size. Maybe next day it opens at 140. I have no idea. Okay. But just based on technicals, from how much I understand Walmart, 154 closes. I'm patiently waiting for this. And I think we go much higher. Okay. And then we have UPS weekly. And guys, AMD will be the last chart. Okay, so up to AMD will be the last chart, and then we'll do some in pre-market. This on the weekly, Yash looks like a bear flag, just technically speaking. This could be categorized as a bear flag, right? And some might draw some angles like this, triangles. But for me, UPS is only good above 210 or above these mid strikes. But for now, I would not play. The reason being because on the monthly, it ran a lot. UPS, we played it last year. We nailed it from $80, right, over to 14. And UPS, when we zoom out, has a history of going sideways for long, long times. Okay, and this stock has gone from 80 to 220 like a retard in just a few months. Right, this bull flag was a play when it broke out. We played a UPS a few months back. After that, I did not look at it because for me it was to extend it. But if UPS can maybe get above these highs of 216, 215, we can probably play the upside. But here it will be chop. It's a gambler's bet. Okay, it could be up and down. Okay, unless you know something. UPST, and you corrected. Okay. UPST, we already went over it, right? ATER. Carrion. This is a monthly chart. This is a chart that LB would probably draw something like this, in my opinion, like a trend line, right? And if we get the monthly tomorrow, we can get above. Okay, here's a number on this. If it gets $9.70 hold, you can probably catch a $1-2 move towards the upside of all the way to 13, 14, or even a bigger move or a $5 move towards 15. Okay, but it needs above 970. 970 is the number. It needs above 970 and then 1090. 970 and then 1090. Okay, so 970, 1090, and then towards 14, 15 can happen. And if you know about this company, something great, then always you can play to the upside. But for now, very bearish below above 50. Right, there has to be a reason the stock went from 50 to 6. So you might want to look at some financial numbers, right? It actually went all the way to $3, right? So names like this can make you or break you. Okay. In the past, stocks like this, I've seen them give a little hope to investors, go up, and then they become penny stocks. They become like 20-cent stocks. Look, I'm not saying this is going to happen to this, but this is just something from my past experience I've seen in the past. IPOs, huge rip, sell off, a little bounce, getting investors excited again. They buy here in hopes that it goes up without looking at the financials, and then boom, they become penny stocks. Okay. So here, you better know what this company is. You better know the financials, the debt they have, their PE. You must analyze this company before going in, because this move is not a good move. From 6 to 52, from 52 to back to $3. Okay. I mean, the company is not stable. Okay. So must look into financials. Sava is a new stock. Like I said, monthly is super ugly, right? I mean, there's just nothing for sellers above $85 based on the monthly. Okay. Now this is a bio stock. It can fly to 500 next month. It can even come down to 20. I have no idea. LB plays this name maybe tomorrow during pre-market or post-market, whichever he does. You guys can ask him. He can give you more idea on this. Right. I usually avoid bio stocks, but on the monthly, looks super ugly. It's at support maybe on the daily if we go in, right? It's at the 200 moving day average now. I see that a lot of people were buying equity today in the thing. Yes, it's at 200 moving day average. You can easily catch a bounce towards 60 or 70, but the premiums will be really high. Take your profits. And if you think it's a great company, you looked into it, they have some FDA approvals coming, whatever it may be, you can probably catch this towards at least midway towards $90. Okay. And but the technicals look ugly. I think if it breaks below 200 moving average, it can go all the way down to 38 or 30. But this, you must know the news on it. You have to understand why this stock is moving. Well, all these price swings, why are these happening? Okay, Sava is a news stocks. Okay, it's not even technicals. It's fully news. Okay, AMD, one of the greatest leap plays, right? Bought in January at 21, held through this turbulence for many weeks, right? Leaps went from 22 bucks to all the way to $7. I held them for 6-7 months, and then they went to 40 bucks almost. Okay, some of you got held with me, congrats. But on the monthly, it looks great, right? The only thing is we want this tomorrow closing above 112, 113. We don't want this monthly here. The only good thing is that it's holding 110. So for me, AMD is not ready, right? I just want to see it hold 110 for some more time, and let's see where it goes. And then on the monthly, if we can get above 112, 113 next month, or next month, if it takes out the high of this month, we can definitely see a move higher. Okay. So the high here is 114.50. So next month or tomorrow, if we can get 114.50 plus, we can probably play AMD to the upside. Okay. Lisa Su has some great comments that she made, and it looks amazing. Okay. And all right, guys. I hope this made sense to you guys. And if you attended our session for free, congrats. Hope we provided some value to you. And in our premium, we do a lot of things. Pre-market, post-market, we cover every day, right? 30 to 40 minutes of live every day. We go over charts and a lot of great plays made by our members, a lot of improved members. We do all kinds of stuff, calls, any strategies, equity plays, whatever it may be. And so check out My Stock Life Discord, right? The link is on Instagram. Please do join us. There's a free chat that we participate in. So you're more than welcome to join us there. And our crypto chat is free, which is going all day. A lot of people are making a lot of money. Check it out. And thank you for attending. We'll see you guys in pre-market tomorrow morning.